It's still playing some music. I'm gonna wait. It's supposed to start at 5 o'clock. The music is still playing, so I'm just gonna wait. It's starting now.
Good afternoon. My name is France, and I will be your conference operator today. At this time, I would like to welcome everyone to the Facebook third quarter 2021 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, please press the 1 and then the number 4 on your telephone keypad. This call will be recorded. Thank you very much. Ms. Deborah Crawford, Facebook Vice President of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Facebook's third quarter earnings conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, Sheryl Sandberg, COO, and Dave Wehner, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Hey everyone, and thanks for joining today. We made good progress this quarter across a number of product priorities, and our community continues to grow. There are now almost 3.6 billion people who actively use one or more of our services, and I'm excited about our roadmap to keep building great new experiences for them. As expected, we did experience revenue headwinds this quarter, including from Apple's changes that are not only negatively affecting our business, but millions of small businesses and what is already a difficult time for them in the economy. Sheryl and Dave will talk about this more later, but the bottom line is we expect we'll be able to navigate these headwinds over time with investments that we're already making today. Before I get to our product update, I want to discuss the recent debate around our company. I believe large organizations should be scrutinized, and I'd much rather live in a society where they are than one where they can't be. Good faith criticism helps us get better. But my view is that what we are seeing is a coordinated effort to selectively use leaked documents to paint a false picture of our company. The reality is that we have an open culture where we encourage discussion and research about our work so we can make progress on many complex issues that are not specific to just us. We have industry-leading programs to study the effects of our products and provide transparency to our progress because we care about getting this right. When we make decisions, we need to balance competing social equities, like free expression with reducing harmful content, or enabling strong encrypted privacy with supporting law enforcement, or enabling research and interoperability with locking down data as much as possible. It makes a good soundbite to say that we don't solve these impossible trade-offs because we're just focused on making money, but the reality is these questions are not primarily about our business, but about balancing different difficult social values. And I've repeatedly called for regulation to provide clarity because I don't think companies should be making so many of these decisions ourselves. I'm proud of our record navigating the complex trade-offs involved in operating services at global scale. And I am proud of the research and transparency we bring to our work. Our programs are industry-leading. We have made massive investments in safety and security with more than 40,000 people, and we are on track to spend more than $5 billion on safety and security in 2021. I believe that's more than any other tech company, even adjusted for scale. We set the standard for transparency with our quarterly enforcement reports and tools like the Political Ads Archive. We established a new model for independent academic researchers to safely access data. We pioneered the Oversight Board as a model of self-regulation. And as a result, we believe that our systems are the most effective at reducing harmful content across the industry. And I think that any honest account of how we've handled these issues should include that. I also think that any honest account should be clear that these issues aren't primarily about social media. That means that no matter what Facebook does, we're never going to solve them on our own. For example, polarization started rising in the US before I was born. At the same time, independent research shows that many countries around the world have flat or declining polarization, despite similar social media use there in the US. We see this pattern repeat with other issues as well. The reality is, if social media is not the main driver of these issues, then it probably can't fix them by itself either. We should want every other company in our industry to make the investments and achieve the results that we have. I worry about the incentives that we are creating for other companies to be as introspective as we have been. But I am committed to continuing this work because I believe it will be better for our community and our business over the long term. Now, we can't change the underlying media dynamics, but there is a different constituency that we serve that has always been more important and that I try to keep us focused, and that's people. Billions of people use our services because we build the best tools to stay connected to the people you care about, to find communities that matter to you, and to grow your small business. And the reason we've been able to succeed for almost 2 decades is because we keep evolving and building. Facebook started in a dorm room and grew into a global website. We invented the news feed and a new kind of ads platform. We became a mobile-first experience. And then we grew a whole family of apps that serve billions of people. And there is so much more to build. Even with all of the tools that we have today, we still can't feel like we're right there together with the people we care about when we're physically apart. We can't teleport as holograms to instantly be at the office without a commute, or at a concert with a friend, or in your parents' living room to catch up. The creative economy and commerce tools are still nascent, and there should be opportunity for millions of more people to make a living doing the work that they love. Our 3 product priorities remain our focus on creators, commerce, and building the next computing platform. A big part of our work with creators is our focus on Reels. Reels is already the primary driver of engagement growth on Instagram. It's incredibly entertaining, and I think that there is a huge amount of potential ahead. We expect this to continue growing, and I am optimistic that Reels will be as important for our products as Stories is. We also expect to make significant changes to Instagram and Facebook in the next year to further lean into video and make Reels a more central part of the experience. One aspect of this is giving all our apps the goal of being the best services for young adults, which we define as ages 18 to 29. Historically, young adults have been a strong base, and that's important because they are the future. But over the last decade, as the audience that uses our apps has expanded so much and we focused on serving everyone, our services have gotten dialed to be the best for the most people who use them rather than specifically for young adults. And during this period, competition has also gotten a lot more intense, especially with Apple's iMessage growing in popularity, and more recently, the rise of TikTok, which is one of the most effective competitors that we have ever faced. So we are retooling our teams to make serving young adults their North Star, rather than optimizing for the larger number of older people. Like everything, this will involve trade-offs in our products, and it will likely mean that the rest of our community will grow more slowly than it otherwise would have. But it should also mean that our services become stronger for young adults. This shift will take years, not months, to fully execute, and I think it's the right approach to building our community and company for the long term. Our next product priority is commerce. Helping people discover new products that they're interested in and reach customers inside our apps is going to unlock a lot of opportunity. As Apple's changes make e-commerce and customer acquisition less effective on the web, solutions that allow businesses to set up shop right inside our apps will become increasingly attractive and important to them. We built solutions like ads that can dynamically point to either a business's website or their shop on our platforms, depending on what will perform better for them. And that will help more businesses navigate this challenging dynamic environment. Building a full-fledged commerce platform is a multi-year journey. Marketplace is already at scale and lots of people rely on it, especially now with supply chain issues that make it harder to get new products. Shops are getting more developed, and we have an exciting program planned for this holiday season where we're working closely with a number of the businesses that have invested the most in shops to identify what works to find new customers and grow their businesses even faster. And our plan is to then scale those solutions more broadly in 2022. Beyond Reels and commerce, I also want to share some thoughts on our longer-term efforts to build the next computing platform and help bring the metaverse to life. This is a major area of investment for us and an important part of our strategy going forward. Because delivering a sense of presence, like you're right there with another person, that's the holy grail of online social experience. Over the next decade, these new platforms are going to start to unlock the kinds of experiences that I've wanted to build since before I even started Facebook. Along with those social experiences, I expect a massive increase in the creator economy and amount of digital goods and commerce. If you're in the metaverse every day, then you'll need digital clothes and digital tools and different experiences. Our goal is to help the metaverse reach 1 billion people and hundreds of billions of dollars of digital commerce this decade. And strategically, helping to shape the next platform should also reduce our dependence on delivering our services through competitors. Building the foundational platforms for the metaverse will be a long road. We just released the 128 gigabyte Quest 2, replacing the 64 gigabyte model for $299. With EssilorLuxottica, we released our first smart glasses, and they're off to a strong start as well. But bringing this vision to life isn't just about building one glasses product. There's a whole ecosystem. We're building multiple generations of our VR and AR products at the same time, as well as a new operating system and development model, a digital commerce platform, content studios, and, of course, a social platform. So to reflect the significance of this for our business, today we are announcing a change to our financial reporting. Starting next quarter, we will begin disclosing financial metrics for Facebook Reality Labs separately from our family of apps. And this will provide investors with additional visibility into the investments that we're making in augmented and virtual reality. In 2021, we expect these investments to reduce our overall operating profit by approximately $10 billion. And I expect this investment to grow even further for each of the next several years. Dave will share more about this later, but I encourage you all to tune in to Connect on Thursday to hear more about our vision and our work here in more detail. I recognize the magnitude of this bet on the future, and I am grateful for the support of our investors, the creative community, and the thousands of talented people working on this effort inside our company to bring this inspiring future to life. And with that, here's Cheryl.
Thanks, Mark, and hi, everyone. This quarter, our total revenue was $29 billion, up 35% year over year. We saw solid revenue growth across all regions, and we continued to grow our user base. We felt the impact of some big external factors in Q3. I want to explain some of the revenue softness we've seen and what we're doing to mitigate the headwinds and help businesses over the crucial holiday period and beyond. To start, let's take a step back. Over the past decade, we've seen more and more businesses shift online. When the pandemic hit, this digital transformation accelerated. We've invested in tools and products over many years to help businesses make this shift. So this acceleration drove very strong growth for us throughout the last few quarters. We've been open about the fact that there were headwinds coming, and we've experienced that in Q3. The biggest is the impact of Apple's iOS 14 changes, which has created headwinds for others in the industry as well, major challenges for small businesses, and advantaged Apple's own advertising business. Our side ramped up by late June, so it hit critical mass in Q3. As a result, we've encountered two challenges. One is that the accuracy of our ads targeting decreased, which increased the cost of driving outcomes for our advertisers. And the other is that measuring those outcomes became more difficult. On targeting, we focused on improving campaign performance even with the increased limitations facing our industry. We're building commerce tools to help businesses reach more new customers and get more incremental sales. And over the longer term, we're developing privacy-enhancing technologies in collaboration with others across the industry to help minimize the amount of personal information we process while still allowing us to show relevant ads. Progress in these areas will take time and will be a focus for us throughout 2022 and beyond. On measurement, as we wrote in a recent blog post, we believe we are underreporting iOS web conversions. This means real-world conversions like sales and app installs are higher than what's being reported for many advertisers, especially small advertisers. We're making good progress fixing this. We think we'll be able to address more than half of the underreporting by the end of this year, and we'll continue to work on this into 2022. Another external factor is slowing e-commerce growth. The strong e-commerce growth in recent quarters was driven in part by the acceleration of the digital transformation that is now tapering off. I think most people see this in their own lives. There was a period of time when many people who were able to stay at home and ordered things online much more. But now in many places, things have opened up and people are increasingly making purchases in person. That doesn't mean e-commerce has stopped growing. Businesses are still making the shift online. But e-commerce is no longer growing at the pace it was at the height of the pandemic. These factors have been compounded for many advertisers by major global supply chain issues and labor shortages, which have left many consumer businesses with less inventory. This has reduced their appetite to generate demand from consumers, which has impacted advertising spend. Businesses in every region and across a range of verticals have been affected. At the same time, we've also seen some impact from COVID surges around the world in places like Southeast Asia. Overall, if it wasn't for Apple's iOS 14 changes, we would have seen positive quarter-over-quarter revenue growth. And while we and our advertisers will continue to feel the effect of these changes in future quarters, we will continue working hard to mitigate them. Despite the headwinds, we remain confident about our future. We believe Facebook and Instagram are the best place for people to connect with their friends and families, build communities, and start and grow businesses. And we believe they're still the best platform for advertisers to reach people where they are and get measurable outcomes. Our focus remains where it has always been, building products that help people connect and businesses grow. Mark talked about video a moment ago. Not only is this a growing area for us overall, but we're also continuing to get better at monetizing it. More than 60% of video revenue now comes from mobile-first video, meaning videos that are shot vertically or are under 15 seconds. Over 2 billion people per month now watch videos that are eligible for in-stream ads, which are ads shown before, during, or after videos. And we're expanding access to Reels ads on Instagram to more advertisers with automatic placement in new creative formats. Another area we're seeing good progress is in lead generation. Our products helped businesses generate quality leads at scale and meet customers where they are on their preferred channel of communication, whether it's messaging, forms, or calls. In April, we started rolling out a new conversion leads optimization goal for higher quality leads. And advertisers can also integrate their CRM with Facebook via our Conversions API. Our tests show that on average, advertisers see a 20% increase in lead to sale conversion rate when they use both the optimization goal and the integration. Q4 is the most important quarter of the year for many businesses, large and small. As always, we're focused on making the holiday season a success for them. We're working to fix the measurement issues they're experiencing and deliver the tools and products they need to grow. And we're rolling out a range of holiday shopping experiences to help people find great deals, support small businesses and good causes, and shop with local and Black-owned businesses. We're bringing exclusive gifts to shops that will be available when people check out on Facebook or Instagram, like 20% off your first purchase and free shipping. Starting next week, we'll host daily live shopping experiences with companies large and small, brands like Walmart, Macy's, Benefit Cosmetics, and Paintbox Nails, to educate shoppers and share exclusive deals. And we're bringing back one of my favorite campaigns ever, Buy Black Friday, to showcase Black-owned small businesses during the holidays. It includes things like Buy Black collections in the Facebook and Instagram shop tabs, and a weekly Buy Black Friday show with live shopping segments from up-and-coming Black-owned small businesses. I want to close by saying how grateful I am to our partners around the world and to our incredible teams who are working so hard to help people and businesses throughout this period. Now, here's Dave.
Thanks, Cheryl, and good afternoon, everyone. We delivered solid results in the third quarter in the face of a challenging mobile platform landscape and an evolving macroeconomic environment. Let's begin with our community metrics. Our global community continued to grow even as we lapped elevated user growth in the third quarter of last year related to the pandemic. We estimate that approximately 2.8 billion people used at least one of our services on a daily basis in September, and that approximately 3.6 billion people used at least one on a monthly basis. Facebook daily active users reached 1.93 billion, up 6% or 110 million compared to last year. DAUs represented approximately 66% of the 2.91 billion monthly active users in September. MAUs grew by 170 million or 6% compared to last year. Turning to the financials, all comparisons are on a year-over-year basis unless otherwise noted. Q3 total revenue was $29 billion, up 35% or 34% on a constant currency basis. We benefited from a currency tailwind and had foreign exchange rates remain constant with Q3 of last year. Total revenue would have been $259 million lower. Q3 ad revenue was $28.3 billion, up 33% or 32% on a constant currency basis. On a user geography basis, year-over-year ad revenue growth was strongest in rest of world at 50%. Europe, North America, and Asia Pacific grew 35%, 31%, and 28% respectively. Europe, Asia Pacific, and rest of world benefited from currency tailwinds, though to a lesser degree than in the prior quarter. In Q3, the total number of ad impressions served across our services increased 9%, and the average price per ad increased 22%. Impression growth was driven primarily by developing markets, especially in Asia Pacific. Pricing growth benefited from advertiser demand and lapping COVID-related pricing weakness during the third quarter of last year. Though, as Cheryl noted, growth was hindered by three primary headwinds. First, advertising spend was negatively impacted by performance and measurement headwinds related to Apple's ATT changes. Second, we are seeing some macro headwinds as growth in online commerce has moderated from the elevated levels experienced earlier in the pandemic, and businesses face supply chain disruptions. Third, COVID resurgences in Southeast Asia have led to additional lockdowns and a curtailment of economic activity. Other revenue was $734 million, up 195%, driven by strong Quest 2 sales. Turning now to expenses. Q3 total expenses were $18.6 billion, up 38% compared to last year. In terms of the specific line items, cost of revenue increased 38%, driven mostly by consumer hardware costs, core infrastructure investments, and payments to partners. R&D increased 33%, driven primarily by hiring to support our core products and consumer hardware efforts. Marketing and sales increased 32%, mainly driven by marketing spend and hiring. Lastly, G&A expenses increased 65%, driven primarily by higher legal-related costs and employee-related costs. We added over 4,700 net new hires in Q3, primarily in technical functions. We ended the quarter with over 68,100 full-time employees, up 20% compared to last year. Third quarter operating income was $10.4 billion, representing a 36% operating margin. Our tax rate was 13%. Net income was $9.2 billion, or $3.22 per share. Capital expenditures, including finance leases, were $4.5 billion, driven by investments in data centers, servers, network infrastructure, and office facilities. Free cash flow is $9.5 billion, and we ended the quarter with $58.1 billion in cash and marketable securities. We repurchased $14.4 billion of our Class A common stock in the third quarter and had $8 billion remaining on our prior authorization as of September 30th. Today, we announced a $50 billion increase in our stock repurchase authorization. Turning now to the outlook. Starting with our results for the fourth quarter of 2021, we plan to break out Facebook Reality Labs, or FRL, as a separate reporting segment. As we have discussed, we are dedicating significant resources towards our augmented and virtual reality products and services, which are an important part of our work to develop the next generation of online social experiences. The new segment disclosures will provide additional information on the performance of FRL and the investments we are making. Under this reporting structure, we will provide revenue and operating profit for two segments. The first segment, Family of Apps, will include Facebook, Instagram, Messenger, WhatsApp, and other services. The second segment, Facebook Reality Labs, will include augmented and virtual reality-related hardware, software, and content. As Mark noted, we expect our investment in FRL to reduce our overall operating profit in 2021 by approximately $10 billion. We are committed to bringing this long-term vision to life, and we expect to increase our investments for the next several years. Ahead of the fourth quarter earnings call, we will share additional details about the reporting format of our segmented financials. Turning now to the revenue outlook. We expect fourth quarter 2021 total revenue to be in the range of $31.5 billion to $34 billion. Our outlook reflects the significant uncertainty we face in the fourth quarter in light of continued headwinds from Apple's iOS 14 changes and macroeconomic and COVID-related factors. In addition, we expect non-ads revenue to be down year over year in the fourth quarter as we lap the strong launch of Quest 2 during last year's holiday shopping season. As previously noted, we also continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. Turning now to the expense outlook. We expect 2021 total expenses to be in the range of $70 to $71 billion, updated from our prior outlook of $70 to $73 billion. We anticipate our full year 2022 total expenses will be in the range of $91 to $97 billion, driven by investments in technical and product talent and infrastructure-related costs. We expect 2021 capital expenditures to be approximately $19 billion, updated from our prior estimate of $19 to $21 billion. For 2022, we expect capital expenditures to be in the range of $29 to $34 billion, driven by our investments in data centers, servers, network infrastructure, and office facilities. A large factor driving the increase in CapEx spend is an investment in our AI and machine learning capabilities, which we expect to benefit our efforts in ranking and recommendations for experiences across our products, including in feed and video, as well as improving ads performance and relevance. We expect our Q4 2021 tax rate to be in the high teens. Absent any changes to U.S. tax law, we would expect our full year tax rate in 2022 to be similar to the full year 2021 rate. Please note that our outlook for 2022 expenses, capital expenditures, and tax rate are preliminary estimates as we have not yet finalized our 2022 budget. In closing, this was another solid quarter for our business despite facing some headwinds. And we believe the investments we're making in our current services, as well as new products and experiences, will enable us to remain the best place for people to connect and for businesses to advertise, both now and in the years ahead. With that, France, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, press 1 followed by the number 4 on your touch-tone phone. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have two. The first one on Reels. It sounds like it's a pretty important part of long-term adoption. Curious to hear about anything you'll share about current user adoption, current engagement, or more color on the demographics of people who are using Reels now. Then the second one, just a little more question on Apple and the ATT changes. Appreciate the color on accuracy and measurement improvements. Any more specifics you can share about where you've made the most progress from your investment to date and sort of some of the areas where you're seeing more challenges you need to continue to invest to really improve to navigate through this more challenging environment? Thanks.
Yeah, sure, Brian. On Reels, that's been a bright spot for Instagram, and currently we're seeing good growth globally. Strength in a number of different markets, but we've been making a lot of progress on Reels and have been happy with it on Instagram. In terms of the launch on Facebook, that's earlier stage. On the monetization front, we're just starting to roll out ads in Instagram, so it's earlier on that front, and we really haven't gotten to a monetization point with Reels on Facebook.
We really have to think about what personalized ads are. And we think they're better for people and businesses, and they're especially important to small businesses. They also can be delivered, can be done in a very privacy safe way. There are two big challenges coming from those iOS changes. The one is targeting and one is measurement. I'm taking the second one first. On measurement, we think we can address more than half of that underreporting by the end of the year and make more progress in the years ahead. We estimate we're underreporting iOS web conversions. We believe that real-world conversions like sales and app installs are higher. And so we have to do the work to help clients measure these properly in order for them to really understand the outcomes they're getting and improving performance. And again, we think we can get a good chunk of that done this year and more in the next year. Targeting is a longer-term challenge. Our direct response products are built on user-level conversions, and as a result of the iOS changes, we don't see the same level of conversion data coming through. So we have to rebuild our targeting and optimization systems to work with less data. So this is a multi-year effort. We're developing privacy-enhancing technology to minimize the amount of personal information we learn and using more aggregate or anonymized data while still allowing us to show those relevant personalized ads and measure ads effectiveness. In order for this to really work and benefit all businesses, it's going to require some cross-industry collaboration and more commerce tools, and those are going to be longer-term efforts.
Operator, we can go to the next question.
Our next question is from Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much. Maybe two, if I can. Maybe Cheryl, following up there, in terms of thinking in terms of quarters or years on both the targeting and the measurement piece, can you help us just go one level lower in terms of what you're building, in terms of what's in your control to put out into the advertising ecosystem versus what might just take time for advertisers to adopt and get comfortable with and better understand the data that drive their business outcomes and how they allocate advertising budget? That would be for you. And then, Dave, maybe if I could follow up on OpEx and CapEx, just how should we be thinking about the elements of core Facebook versus some of the things you're trying to build against Mark's vision for the long term with Reality Labs, and how that might be a driver of permanence versus transient nature of OpEx and CapEx in the years ahead? Thanks so much.
So some of the technology we can build ourselves. We build AI. We make continued investments in AI that help us maintain or improve long-term performance data. We're building some of our own commerce tools, and those are tools we can build that we need other people to adopt. And then some of the targeting opportunities we see have to take, tools we can build or tools we can build in industry collaboration. We're really working as part of several industry collaborative groups on what those tools will look like and how those get adopted. So those obviously take more partnership and are less in our direct control.
Hey, Eric, on the outlook on expenses in 2022, it's obviously early, but we wanted to give an initial outlook of our expected expense range since we typically do that in Q3. Mark outlined we have a lot of priorities that we're investing against across the business. That includes a lot of areas in the core sort of family of apps, but also in FRL. We've got a lot of priorities in advertising, AI, commerce, privacy. So when you kind of pull all of these things together, we've got a pretty robust spending plan next year. The primary driver is going to be accelerating headcount growth in 2022. So that's going to be something you'll see. Headcount coming in above 20%, obviously, that we had this quarter. And we also expect to have higher expenses from office operations and travel once larger parts of the workforce are returning to the office in 2022. But we're not providing a specific breakdown at this point for segment expense.
Our next question
and you can go to the next question.
Our next question from Doug Anmuth with J.P. Morgan. Please go ahead.
Great, thank you. One for Mark and one for Dave. Mark, just given the significant investments in both P&L expenses and CapEx, and clearly you're talking about the heavy focus on metaverse over the long term, just hoping you could help us recap kind of the one year, 3 year, and then 5 year aspirations from a product perspective as you've done in the past. And then Dave, just on the 2022 expenses, which is about 29 to 38% growth Do you have any commentary on revenue growth in 22 to go along with that? Thanks.
I can talk about the metaverse and Reality Labs part of this. So for the next 1 and 3 years especially, I think what you'll see is us putting more of the foundational pieces into place. This is not an investment that is going to be profitable for us anytime in the near future. But we basically believe that that the metaverse is going to be the successor to the mobile internet, that it's going to enable social experiences that are the ultimate expression of what we try to build, which is allowing people to feel really present with the people they care about, no matter where they actually are. And we think it's going to unlock a massively larger creative economy of both digital and physical goods than would exist today, and allow millions of people to be able to do work doing what they love, and enabling a whole different economy around that I think is going to be another important pillar of our business over the next decade. So on the next 1 to 3 years, I wouldn't focus on the sort of business outcomes there quite as much as I would just the products and the infrastructure that we're putting in place. So there are new platforms, there's hardware components, there's the whole virtual reality product line, there's the augmented reality product line. We're kind of starting to put those pieces in place. There's the operating system and development models for all these new creative tools. There's the commerce parts of what we're doing around this and how they tie into broader commerce efforts across the family of apps. And then there's all the social platform work that we're doing with our Horizon effort that touches a bunch of different areas of what we're doing. But I think you'll see all of those pieces start to get built out and start to mature a bit over the next few years. And then, if we do a good job on this, and I would say later in this decade is when we would sort of expect this to be more of a real business story. But I think what we kind of think about for the near term is, are we delivering the product experiences that are completely groundbreaking and that people try this and they just think this is amazing and can see the glimpse of where this is going. And that will pave the way for the future. The business North Star that I mentioned in some of my opening remarks are, we hope that by the end of the decade that we can help 1 billion people use the metaverse and support hundreds of billions of dollars of digital commerce. And I think if we can do that, then this will be a good investment over the long term.
Hey, Doug, it's Dave. We're not at this point providing a specific revenue outlook for 2022. We continue to see opportunities to grow both impressions and price next year, but we're obviously coming off an incredibly strong year of revenue growth in 2021. So we do expect deceleration in growth in 2022 from the full year 2021 rate. And this, there's sort of uncertainty implied in our range for Q4 revenue, and I think that holds true for the 2022 outlook as well. There's a lot of factors at play, including advertisers working their way through the impact of the Apple platform changes. We're obviously navigating a challenging macroeconomic environment. We'll have a better sense of how these things work together as we get through the holiday season. But yeah, given the expense growth that we outlined, which is implied in the 30, north of 30%, we don't expect revenue growth at that level, so we would expect 2022 margins to be lower than 2021.
Our next question
France, you
is
go to the
from
next
Justin Post with Bank of America Merrill Lynch. Please go ahead.
Great, thank you. Maybe one for Mark and one for Dave. Getting 18 to 29-year-old users is not easy. I wonder if you could maybe outline some of your strategies to kind of get some progress there. I know it's multi-quarter. And then, Dave, in your guidance for Q4, can you help us all on the IDFA impact? Is it contemplated to be about the same as 3Q, a little bit better as you work on your measurement, or is it a little bit more of a headwind in Q4? Thank you.
Yeah, Justin, I can actually take both of those questions. In terms of the younger demographics, our products are obviously widely used by young adults, and we remain focused on building out those product capabilities and continuing to focus on making our products relevant for that audience. I think Reels is a big part of that strategy. And, we've now got that rolled out in over 100 countries since launching in August of last year. And, we're continuing to invest in that experience and make ongoing product enhancements. So that's probably one of our big focus points that I would point to. In terms of the IDFA,
maybe I'll just add something on Reels. I think that this is going to be a very meaningful qualitative change in how people use a lot of different products across the internet. I think every once in a while a format comes along that allows new types of content, right? So we saw this with newsfeed, we saw it with stories, and I think Reels is from everything I've seen, has the potential to be something of that scale where there are different flavors of it in different apps, but I think as a format, it can be very fundamental. And I think we're still closer to the beginning of that journey than we are to its maturity. In terms of just having rolled out, some of the initial tests and experiences, it rolled it out in Facebook, and you mentioned all the countries that it's in Instagram, but it's just continuing to grow very quickly. So I think that's going to be a big part of the focus here, and I think I'm excited over the next year or two to see how that grows into something that I would bet will be like Stories is in our products today. Sorry, Dave, go for it.
Yeah, Justin, on the iOS question as it relates to Q4 versus Q3, the bulk of iOS 14 updates were completed, as we entered Q3, which contributed to the step up in the impact from Q2 to Q3. Since iOS 14 is now widely adopted, we don't expect a similar step up in